Welcome back. Today we are discussing one of the most frustrating parts of opening a bank account, applying to a payment service provider, or onboarding with a financial institution, the request for ultimate beneficial owner information, proof of funds, and proof of wealth. For many business owners, this feels excessive, intrusive, and confusing. You provide company documents, passports, proof of address, bank statements, and business information. Then suddenly, you are asked to explain where the money came from, how the shareholders built their wealth, and why funds were introduced into the business. So, why does this happen? Financial regulators expect banks, payment institutions, and payment service providers to understand who ultimately owns or controls a business. These individuals are known as ultimate beneficial owners, or UBO. The purpose is to prevent businesses from being used for money laundering, terrorist financing, sanctions evasion, fraud, or other financial crime. But identifying the UBO is only part of the process. The provider may also need to understand the source of funds and, in some cases, the source of wealth. Proof of funds is about the specific money involved in the relationship or transaction. For example, was the money generated from trading revenue, shareholder capital, a loan, investment proceeds, retained earnings, or the sale of an asset? Proof of wealth is different. It is about how the UBO built their overall wealth over time. This could be through business ownership, salary, dividends, property sales, inheritance, investments, or the sale of a company. That means not every customer, business, or UBO should be treated in the same way. A simple, low-risk company with a clear ownership structure should not normally be treated the same as a complex, cross-border, or higher-risk business. But in practice, many banks and payment service providers apply these requirements through rigid onboarding checklists. Instead of asking for information based on the actual risk, they may request extensive documents from every UBO, including personal bank statements, tax returns, salary slips, dividend records, sale agreements, investment statements, and explanations of historical wealth. From the provider's perspective, they are trying to protect themselves. They need to satisfy regulators, auditors, sponsor banks, card schemes, and internal compliance teams. They also want to avoid financial crime risk, reputational damage, fraud losses, and regulatory criticism. So the process can move from what do we reasonably need to understand this customer to let's collect as much as possible so the file can be defended later. That creates a major gap between the regulatory intention and the customer experience. For the customer, this can be extremely frustrating. Business owners may be asked for personal financial documents without being told why. Different teams may ask for the same document more than once. Some requests may appear unrelated to the business activity. There may be long delays, unclear communication, and sometimes a decline after weeks of effort. This does not only create frustration, it creates commercial damage. For the customer, delayed onboarding may mean they cannot accept payments, open an account, receive settlements, launch a product, or grow the business. For the bank or payment provider, poor onboarding can mean lower conversion, higher abandonment, more complaints, reputational damage, and weaker customer retention. In simple terms, badly managed compliance becomes a business blocker. The answer is not to remove UBO checks, proof of funds, or proof of wealth reviews. These checks are important. The answer is to make the process clear, proportionate, and commercially intelligent. A good onboarding process should explain why information is required, separate proof of funds from proof of wealth, request documents based on actual risk, avoid duplicate requests, and use public registers and independent data before asking the customer for more information. Businesses should also prepare properly before applying. You can support your business in doing that and shadow the application process to ensure a balanced approach to risk from the payment service provider or bank. The key message is this: the regulatory requirement is not simply to collect proof of funds and proof of wealth from every UBO in every case. The real requirement is to understand ownership, control, legitimacy, financial crime risk, and whether the customer's funds and wealth are consistent with the customer profile. At CRAC Solutions by Waterfall Innovations Limited, we help businesses prepare stronger applications, understand what banks and payment providers are really asking for, and reduce the friction that often leads to delays, abandonment, or rejection. Thank you for listening, and speak soon.